In Europe, the main topics over the past few months has been Brexit. What you can see on the left-hand side is that since the Brexit vote in 2016, business investment has been declining. Another impact that we've seen materialize over the past few months has been manufacturing output as well. So because suppliers all over the world have been rerouting their supplies and changing their supply chains to avoid disruptions of a potential Brexit, we've seen manufacturing output slow and contract over the past year. So you see these two green bars here. Why do we see these two green bars? Well, it's because it's in February and March, so it's because US manufacturers actually stockpiled back then because at first Brexit was expected for the March 20th. So that's why it helped to support the manufacturing sector, but the overall trend has been for a contracting manufacturing sector, and it's going to continue over the past few months because it remains uncertain what will happen with the Brexit. And it's having an impact in terms of business insolvencies. You can see that in 2018, business insolvencies in the UK has increased by 10%. In 2019, we forecast that it will increase by an additional 4%, and it could increase by even more than these 4%, in my opinion. And the slowdown in China has been driven by two main factors. So, like in the rest of the world, it's been driven by falling industrial production. So it might not seem like it because you can see that in August 2019, industrial production has still been growing by a healthy 4.4%. But 4.4% in the case of China means that it's the lowest rate of growth for China industrial sector since 2002. And you can see that retail sale has been falling quite consistently over the past 5 to 6 years or so. And it's been driven mostly by changing consumer habits. And we see more and more Chinese consumer being equipped with durable goods. And that's why, for instance, we've seen passenger car sales contracting over the past few years, having an impact, for instance, on the German automotive sector. An important development for the US that has been happening over the past year. It's the new free trade deal that is going to cover North America called the USMCA, and that is going to replace NAFTA. So as you can see, the most important aspect is that Canada will open its dairy market to the US economy, that more parts must be made in North America in the automotive sector, and also that now between 40 and 45% of auto must be made by workers making at least 16 USD per hour. But what will be the impact of this new trade deal? That's what you can see on the right-hand side. You can see that the trade deficit of the US with its North American counterpart is slightly declining, but it's only just a matter of a few millions in a 140 billion deficit. So the impact will be quite low. That's the takeaway from this slide.